Okay, folks, welcome back. Let's have a quick look at what the markets are doing. So looking at gold, I did post a Twitter post sometime yesterday looking for this level here around this 2390 to 380 mark. Okay, so that is this post from yesterday. Okay, we're still looking for lower prices on gold. I have already done a video on why I think we're going lower, so look at that, watch that video. Okay, so still waiting for lower prices on gold. Let's have a look at what some of the other markets are doing. Let's look at euro. Okay, now all these down movements to me are opportunities for a pullback. I'm expecting higher prices on all foreign pairs. Okay, so euro, I'm still looking for 1.1 with 1.1. So there's 1.1 there. So I do believe that we will get above all these highs. Okay, and rebalance this opening gap that's still currently open. Okay, 1.03 looks like there's a data problem here on the euro, but let's see. I'm looking for movement back down to this gap. Okay, let me see if there's another euro data provider we can use. Let's see. Well, let's see what we can do. Let me see on my brokerage account where euros come down to on a daily chart. Okay, so that gap's still open. Okay, so yep, so it has come a bit lower. We are missing some data, but that's okay. I'm looking for euro to come into this gap, into these two down candles. Okay, that's kind of where I believe the draw liquidity is. So I think let's look at this area here. Okay, that's probably the midpoint of that gap, but I do think we'll come into these two down candles, and I'm looking for high prices. So looking for 1.1. Okay, 1.10 on euro, which is right there, 1.10. Okay, so watch that, but we need to wait for the right time. So I do believe there's still a bit more down movement on euro. Okay, let's take a look at the Aussie. Aussie also, I did mention that we would come into this gap, which we have now completely balanced. Okay, this is the daily chart. So we've met our objective on the Aussie. I mentioned that we would come up here at 68 when we were down here somewhere. Okay, so go and look at the previous video that I've posted. And I still believe we need to go above this. I'm still bullish on the Aussie. We'll probably hit 69. Okay, probably a better target would be this level here. We've got relative equal highs. So yeah, that's at 69 level. Probably even higher up into 69.50. Okay, and higher into Aussie, looking at even up to 70. But we'll take it one step at a time. The next draw on liquidity, we still need to make a move down, I think, into this gap. Okay, I don't see us having a need to go lower. I think Aussie won't go too much lower, probably into this rebalance of pricing. We may dip into this wick. Okay, so for example, if I just take a midpoint of this wick that we haven't come down into, there's a good chance we will get down to there, 66.50, right? So all I'm going to be doing is looking for a bullish day. Okay, so I'm going to let this come down, and if I get into this price level or this price level, I'm going to be looking for a update closure, a bullish day. That's when I'll start to look at my long setups. Up until then, I'm not interested in shorts at this point in time. Same with the euro. All I'm going to be looking for the change in the direction, and all I'm going to do is wait for a bullish day. Okay, so we're going to come down, maybe hit this level here, maybe even come and rebalance this gap into this last down candle, the open of that possibly. Okay, we should put a level there as well. That's essentially the daily order blocks. Okay, all I'm going to be looking for is we come down there and we have a bullish day. Once we have a bullish day, then I will look at, okay, where could we possibly look for long entries. Up until then, I'm not interested in short in this market. Okay, unless we do get a pull back up, maybe if we do get a pull back up prior to taking out these lows here, then like for example, if we do get a move back up to 1.09, 1.0920, then maybe if it's at the right time and the right day at the right price level, maybe on a small position size, I may take a short on the euro down below these lows into this level that I'm marking. Okay, but I'm not really interested in short at the moment. I'm waiting for more information, looking for really a bullish day closure for longs, because that to me is the opportunity. Everyone's going to be thinking this is now going down, 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 down. I don't believe that's the case. I believe the foreign pairs are all bullish at the moment. Pound and Aussie to me are probably the best looking pairs. Okay, I'm bullish on pound. I've been bullish on pound since we've had movement from this move down. Okay, up to 1.28. I think we will get down to this level. Okay, on pound, and I'm looking for higher prices from this level. Okay, we may tap into this down candle, but anywhere down into this zone, we might even get into this level here. Okay, so that'll be a nice zone, or tapping into this down candle. I'm looking for much higher prices on pound. I think pound is headed up to these highs. Okay, 1.315 and higher. Okay, I think pound is headed much higher. Okay, but for now, the way that I'll be looking to position myself is I'm going to be waiting for a turnaround. Okay, I'm not looking for shorts unless we do get a move back up to above 1.295. If we do get a move back up into this gap or just above this candle without taking any of these lows, like right now we've got equal lows here. If on a Monday we don't take this out and we continue to go higher and possibly come into this gap, let's mark it out. If we come back into any of this gap, okay, without taking out these lows, right? This here is the low of Friday the 12th. I'm looking at a daily chart. And what's the low here? It is 1.29019, and the lows is 1.29009. So we have just slightly gone under it, and that's good. We've taken some liquidity. Okay, that could indicate Monday we go a little bit higher. If we get a move up into this zone 1.295, I'll be happy to look for shorts. Notice what I've said there, not too short, to look for shorts, looking for my setups at the right time, at the right day. Okay, then I'll be looking to, if I get the right setup, to short from there down to this level here, or even this gap here. Okay, let's have a look at here. We look like we have a volume imbalance here. What's the open, what's the close of this candle? Close here is 1.28483 and open 1.28483, so that's close is the same as the open. Okay, sometimes TradingView doesn't clearly show the volume imbalances. I might look at this on my actual brokerage platform, on my brokerage chart, which has real prices from the market, live feed. TradingView sometimes doesn't have that accurate pricing there. That does look like a volume imbalance. Let me see if we can see it now. Where's pound on my brokerage platform? Daily chart. Yeah, hard to see. I might have to look at the data closely. But anyway, as I said, I'm looking for high prices on pound, but I want to see a further pullback into this zone. Okay, and there may be an opportunity for short entries if we get a pullback above. Yes, this is Friday's high, right? So Monday or Tuesday, if we get a move above Friday's high into any of these 3 up candles, which is the bearish order block, okay, I'm happy to take a small position size to the downside into this zone here. Okay, but longer term, I'm looking for high prices on the pound. What haven't we covered? We've looked at Euro, Aussie. Let's look at New Zealand. Let's get rid of all these lines. We don't need any of these. Okay, let's have a closer look at New Zealand. What's New Zealand doing? So New Zealand, I would have expected New Zealand to stay within this price point. Okay, and it's kind of going below that, so I don't like that. Why is this not aligning? Let me just make sure this is correct. Let's have a better look. So you got a low here, a high, lower low, and then a higher high. These up 2 candles are the bullish breaker. Okay, let's draw that properly. There we go. Well, okay, well, price is still within that zone. So long as we stay within that zone, I'm okay for expectations of New Zealand going high. I do believe, and I have said before, we're looking at this level on the New Zealand, looking at 63. Okay, so New Zealand is a great opportunity for repricing. We probably will tap into this. We might wick down into this early next week, and that'll be good. There's a bit of liquidity residing here. There's a bit of a fair value gap there as well. Let's mark that out too. So long as we don't have a body closure on a daily chart below this bullish breaker, so we can go down here, wick down into there, come into this daily order block, also balance this, take out this liquidity. That's a great repricing potential up to high time frame 63, even back up to 63.50. Okay, I do like that as well. So I am overly, overall I'm bullish on foreign pairs. Okay, I'm bearish on the dollar index, which will drive prices higher. To me, this is a crawl down to rebalance and maybe take out liquidity for a higher move. I like this chart. Okay, this is a low, a high, lower low breaking structure, higher high back down into these 2 up candles, which made that high that was broken, making that the bullish breaker. Let me actually see if we can put a better, there we go, bullish breaker. Okay, that's what I had there before. So that's important. This zone needs to be intact for price to continue higher. I don't mind it wicking down. Okay, we could have a move down Monday, Tuesday, wicking down into this. That's okay. So long as we kind of stay within this range, I'm happy to look at this level. After we get a move down in there and get a bullish candle closure on a daily chart, I'll be looking for pullbacks into potential repricing higher up into these levels. Okay, so we've taken a look at New Zealand, Euro, Aussie, pound, bullish on all of them. Let's have a look at gold. Okay, a little bit closer, just for a bit of a quick lesson on entries. Okay, so I predominantly only trade gold. Okay, because I just like the volatility and I find it's very easy to trade. That's my perspective. Some of you may not agree with that, but you'll need more practice and more chart time, and then hopefully your trading will also improve. Okay, let's look at a 1 hour chart on gold. I have walked through some of this previously, but I want to really point out how easy this can be on a high time frame chart. Okay, so we are looking at this and we've got quite a significant movement, right? So for the past 2 weeks, we've pretty much been going up, 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 right? Particularly last week in particular, we've had Monday, Tuesday, Wednesday completely bullish. Okay, I typically look for reversals on a Wednesday or a Friday. Wednesday is middle of the week. I look for reversals on a Wednesday. If they don't occur on a Wednesday, then I'm looking for some kind of reversal, meaning a pullback. Okay, not a complete reversal, just some kind of a pullback. If we've been going up, then on a Wednesday, I'm looking for a pullback to go short. Or if I don't get that on a Wednesday, and we have been going up like we have this last week in gold, I'll see if we get that on a Friday. Okay, typically that's my trading model. So what that means is I'm expecting a setup to go short. If we've had a pump up early in the week, I'm expecting in the middle of the week to get some kind of short setup. That doesn't mean I'm automatically short on a Wednesday. I need to see the setup. Okay, now I do understand the tape and the numbers quite well. Okay, you can see my trade journals on the Twitter account that I post all my trades on. So that's why I can be quite nimble and enter on a very short time frame, like 1 minute, okay, which is what I typically will use, and still capture large movements. But it's easier for you to see the setups on a higher time frame, like 1 hour. And that's what I want to walk through, because I want to show you how easy this really can be, and you want to stick to identifying your setup and then waiting, right? Patience is the key, waiting for that setup to reappear. If we look at what's happened here, we can see this is last Friday the 12th, okay? This is Monday the 15th. Now, what I want you to notice here, Monday opens up and takes out this liquidity, okay, and goes down into this order block. This is an order block because of all this liquidity we've taken, okay? All these lows coming into a fair value gap here from Thursday, okay? So at this point, we've gone above, okay, and order flow is bullish once we get back down here and start trading above. Okay, this is all Monday. This is London, right? 2 a.m. Notice the time. The timing is very important. Notice that we get this dump inside of London, 2 a.m. Okay, everyone's thinking we're going to go down to Friday's low. Okay, that might be the case, but we get an engulfment candle. This is really, if we are going lower, then really we should be moving higher in London, taking out these highs and then going lower. Okay, this here is Friday's PM session, right? Friday's PM session. So Friday's PM session is very important. If we were in London and we haven't taken out Friday's PM session and we're going down, that move down is taking out this liquidity coming into this order block, okay? Then we're moving up, okay? That is a good indication that we're moving higher, not lower, okay? If we had, instead of these 3 down candles, had 3 up candles, right, in London, prior, you know, at that, we had at 2 a.m, we were up here above the PM session, right, of the previous in the afternoon session, okay? Then you could say it's taking liquidity and then we're going lower. Okay, that's how you can identify your direction on the Monday. Very important. Look at the PM sessions. And I've spoken about this previously. Go watch my previous videos. I've even taken trades where I've targeted the PM session, right? That trade there, if we took that just after seeing these engulfment candles where you have these down candles that started to move higher, we've engulfed, meaning we now have a change in state of delivery. You get this pull back down, okay? If you took a long entry back into the order block up to that PM session high, that's 90 pips, okay? You could take 50 pips. You could take this high here before you get to the high of the PM session, okay? You could be targeting these highs. Once you're down here, targeting these highs or these highs, that's going to give you 50, 60 pips right there, 80 pips. So before you even get to that target, you've got enough room, okay? So you need to look at this on your own charts, right? You might be confused in what I'm saying, but looking at this, everyone is thinking we are going down when they see these down candles, and where would they be targeting? They'd be targeting these lows, and they'd be stopped out. That for me was a buy, because when I see those 3 down candles, and I see we haven't taken out the previous PM session highs, I know that's going to be the draw. And these highs here, that's the Thursday high of New York, okay? So you've really got to look at where's liquidity. This has already taken liquidity on Friday, coming to a fair value gap, and we've traded above. That is now a change in the state of delivery right there on that Friday afternoon session. That makes that PM session high. You know you're bullish, okay? Unless prior to this London open, you take that out, then you get down movement, then up into bearish order blocks, and then that could be a short, okay? Think about that. So Monday, we've continued to go higher without taking out Friday's low. Order flow is bullish, okay? There's lots of opportunities. I've even just explained a couple there. I mean, you only need 50 pips a week with proper risk management, position sizing, and identification of the bias with what I'm showing you on this channel, understanding price action behavior, where liquidity draws are. That's all you need to be profitable. You don't need to capture this entire move, right? So Monday is a clear long in London. Immediate target would be the high of New York on Thursday, the high of the previous Friday PM session, okay? So we continue to go higher, and 7 a.m. is also an important time. 7 a.m. is the start of the New York session, right? So what does 7 a.m. do? We get this down candles forming a order block in London that's coming into the previous order block from the previous day. Okay, this is Monday, we move up. 7 a.m., key time, New York opens, okay? And 8 a.m., every change of the hour, every new hour, have a look at what price is doing. 8 a.m. we're going to where? 8 a.m. goes into this fair value gap, okay? On Monday, into this order block, which was created in the London session, okay? So that is another entry to go long, right? At this point, we haven't taken out these previous New York highs, so that could be your target from here, okay? So you're long from there, and you can see you've got a nice move up, okay? Again, move down, and this is now PM session. I don't trade PM session. That New York session for me will be it, okay, up to 11 a.m. 11 a.m., that makes the high, right? Okay, so my trading typically ends at the end of New York. This is 11 a.m., okay? So this is now all PM session, right? Now Tuesday. Tuesday, again, we have Asia moves up and doesn't give a clear entry, but if it was me, and I don't recall if I traded this or not, if it came into this fair value gap, I may have traded this back up to these highs, okay? Order flow is bullish, so every pullback for me is going to be a buy, okay? But most of the time, I'm trading in London or New York, and this is the New York, 3 down candles into this order block, okay? For me, that would be a nice entry long, okay? Now, we come to Wednesday, and I traded some of these short entries in Asia. This is all of Asia, okay? We got a pump and a dump. These are all on my Twitter post, these Asia shorts, into this order block, okay? Those shorts I have put on my Twitter profile. They were on a 15-minute chart, so they are, where are they? So they're those shorts, okay, on that Wednesday, right? So look at them. I'll explain them. I've even got a video on these Asia short trades. So have a look at those. I think that video is here, okay? Video on how I traded those shorts in Asia, right? They were these shorts, okay? Nice short entries in Asia, and that was just this, all of that. Pump up, pump down into this order block, okay? So that's when I also took some longs, okay? And I already said on this day, at Asia, there's a video I posted. Go find it. It's on my Twitter profile or my YouTube profile as well, at Forex Recipes. When I closed out my Asia trade, I said I'm looking for a 300 pip move. Okay, and I mentioned in the video that I want to see how London trades and how New York trades. And what I said was we were going to get down to 2430. Okay, which we've surpassed. And what I said on that day, if I go back to Wednesday, these were the Asia shorts that I had taken. Okay, into this order block, into this gap. Okay. That was last Wednesday. I remember my trades because this is all I do, right? That's why I remember the numbers, the levels, because day in, day out, I'm looking at these charts. And you can see my trades on my Twitter journal, okay? Because I trade quite frequently. I probably overtrade, but that keeps my mind fresh and in sync with the charts. So once I've taken my Asia trades, I took a trade down to the low of Asia. Then I waited for this pullback into this gap. I took another short down to this ultimate target, okay? At this point, I said I'm looking for what's going to happen in London and New York, but I'm expecting a big move down, 300 pip move down. And I said we'll most likely come into this gap to rebalance, which we did in London. And I said, oh, we might actually take out these highs, which we did in New York, okay? So I took these longs. This long here is what I've taken. I've already marked this on Twitter and did a video on this as well at 7 a.m. up to above these highs, okay? Tapping into these two candles here. Didn't target the highs. But I was thinking we may tap into it, but also thinking we may not tap into it. And I had to be nimble because I'm expecting a drop in New York, a significant drop in New York as we did. So going back to the hourly chart, because I want you to focus on the hourly chart because it's a lot easier to read the market on the hourly chart, okay? So I'm not expecting you to take those trades on the way up, Monday, Tuesday, Wednesday. Sure, you can if you can spot them, but I want you to find the easy money, right? The easy setup. That's what I'm going to talk about in this video. These trades up Monday, Tuesday are easy for me because I do it day in, day out. You might not see those opportunities, but you won't miss what I'm going to show you now in regards to taking this short entry because that was the key setup. The move up Monday, Tuesday was all manipulation. That was the pump up, even though I was able to capitalize on that because I understand price. I understand my market. I understand the levels. I understand the timing and I understand the signatures to look for my entries. I understand what my setup is to take my entry. I understand what I need to see to go long or short, and that's what you need to learn for yourself. What do you need to see on your own chart at the right time and the right day to take an entry? What do you need to see? What's your setup to go long or short? Okay, I understand my setups. That's why I can take this move up, all the way up and all the way down. Let me talk about the easy setup, which is a short on Wednesday or Thursday. Let's go and look at that in more detail on this 1 hour chart. Let's talk about that now. Now, the reason that I say this is easy on a 1 hour chart because you can very clearly identify the ICT signatures, okay? So if you are familiar with the ICT signatures, then this chart's going to be very easy for you to work with, okay? So these swing lows are important. You have a low, you have a high on the left and a higher, sorry, you got a low, higher, low and a higher, low on the left and the right, okay? That makes that a swing low. When that's broken, that's a break in market structure, okay? On a 1 hour time frame, that's even more powerful, okay? Now, this is another swing low, okay? You got a low here. It's a 3-bar pattern, right? You got a low here. You got a higher low on the left and a higher low on the right. That's a swing low. Now, this one's important because this has a single down candle. When I see that and I see 3 up candles, that 3 up candles is basically the bearish order block, okay? And that bearish order block becomes valid once you trade through there, like we've done on Wednesday at 10 a.m., which is New York. Timing is very important, okay? The high will typically be made at 9:30, in between 9:30 and 10 a.m., okay? Typically, that's where you want to find your setups on gold, okay, in that New York time, 9:30 to 10 a.m. That'll either make the low or the high, okay? So if it's a bullish move we're expecting, I will look for my entries around that 9:30 a.m. to 10 a.m., okay? On this day, it was a bearish setup I'm looking for, and you can see the high was made at 10 a.m. This candle starts at 10 a.m., ends at 11 a.m., so you need to wait for the candle to finish, okay? This is a 1 hour chart. On this particular day, I looked at this on a 15-minute chart and identified the entry on a 1 minute chart, okay? That's because I was already long, already had these levels outlined in advance because I'm looking for, if it does, I know that if we're going above here, it's going to be a short at the right time. So at the end of that New York session, we were above here, okay, with a nice pump up. So I'm looking for shorts already. So I've taken that short after seeing a setup on a 1 minute chart. And I have spoken about that previously. Look at this trade that I've spoken about previously on videos, okay? Now, once you get this engulfment, okay, you want to wait for a pullback. Let the market show you it's moving down. This is nice price displacement, okay? Very rare will the market just go down and keep going down, not let you get in. Sometimes that does occur, but very rare. You typically will get an entry, okay? So on the 1 hour chart, we have, once we've closed below this swing low, we have a few things, okay? The fair value gap is one thing we have, okay? These 3 up candles is the bearish order block. That's 2 things we now have. This down candle in this swing low that we've now basically traded below and closed below becomes the bearish breaker. So 3 bearish signatures on a high time frame 1 hour chart, as well as breaking market structure on Wednesday, okay, we're expecting a short and at the high of the week and the high of the month, right? All those things combined equal a beautiful short potential setup. What are we now waiting for? We're waiting for a pullback into any one of these bearish signatures. One of those is this fair value gap, okay, which we get. Let me fix this up. I'll choose that one there. Okay, beautiful entry into the fair value gap. Okay, that is also tapping into the up 3 candles, which are the bearish order block. Okay, right there, and tapping into this. Notice how price does not go above this at all. Right, this is your bearish breaker. Okay, let's see if we get a better box for that. Okay, so that's the third signature. All 3 have been tapped into here. Okay, making this a great pullback entry for a expectation of a repricing lower. Now, what time is that? That there, when I'm trading in London, it's either 3 a.m. or 3:30 a.m. will make the high or the low if you're bullish. Here we can see the 3 a.m. hourly candle has made the high, tapping into this bearish order block and closing this fair value gap and tapping into this bearish breaker. Okay, now time is there, price is there. So you've got time and price. Okay, now the other thing that I've mentioned is this 3-bar pattern. You've got a move up. Okay, then this candle goes into a higher time frame signature. In this case, it's a bearish order block or the bearish breaker. Okay, and notice that if we just draw this bearish breaker again, look how the midpoint is being respected there. We're not really going above that midpoint, right? That tells you price is weak. But the key here really is we have a change in state of delivery when we have this down candle on the Wednesday. Okay, this is the pullback, but even in this in our London, we have an engulfment of this entire structure after taking out anyone that's short from this candle, wicking up into here. Okay, engulfment now takes out all that liquidity. Okay, so this 3-bar pattern I've spoken about is another confirmation of a change in state of delivery after hitting these higher time frame signatures. Okay, at the right time. This is the 3 a.m. candle, which we're expecting could be a high. Okay, now because this bearish breaker exists, we're not really expecting price to trade above there. So it's very wise. It's a reasonable expectation that London has made the high. Okay, we're not expecting New York on a Thursday to come back and take out this high that London's made, because London has also given us a change in state delivery with this down candle and coming to the bearish breaker midpoint level and to the higher time frame bearish order block. Okay, so that London high is very safe based on all those things that I've said. Not to mention Wednesday we've already broken structure and this is really a pullback. Okay, then now on New York on that same day, which is Thursday. Okay, this is Thursday. We have news, and what does New York do? It continues to go lower. Now between that 9:30 and 10 a.m. is key. So this is 9 a.m. this down candle. Okay, it gets everybody short, and they probably are, they are on the right side of the market, but then it takes them out by going up, stopping out anyone that may have stops above here, coming into this fair value gap. New York will always provide an entry. It may not always give you the best entry, but it will provide you a entry. And the entry we got on New York on Thursday was a move down back up into the fair value gap created in London. Okay, that there is a 10 a.m. candle. So again, 10 a.m. to that 11 a.m. makes the high, just like it did on the Wednesday. That's that 10 a.m. candle here. Timing's important. Okay, so everyone's short and they're thinking they're on the right side. Once these lows have been taken, let's put a line there. Have those lows been taken? No, they haven't. Okay, everyone's stops are going to be adjusted to this high. Okay, because that's the previous current swing high as they're moving down. New York comes in and taps into that high, taking out people who may have already moved their stops to break even perhaps, and gives a beautiful entry into this fair value gap. Okay, at the right time. So that is a very easy way to read the markets on a 1-hour chart when you have everything else in place. Wednesday is the right day to be looking for shorts after seeing 3 days, Monday, Tuesday, Wednesday, of bullish momentum. Okay, we're not automatically shorting just because it's a Wednesday. We're looking for a breaking structure, which we have when we go below this swing low, we go below this swing low. We see the signatures. We see a bearish order block here that's been validated once we've had this change in state of delivery. We see this down candle inside of that swing low, okay, which is the bearish breaker, right? We see this fair value gap. We see a shift in the market structure by going below this swing low and this swing low on Wednesday, after going and taking out high of the week, which is also high of the month. Take all those things into consideration, okay? Thursday comes in, London, taps into these signatures, and at 3 a.m. makes a high and engulfs. That's a change in state of delivery. We're not expecting New York, which is a few hours later, to come and take out that high. Not expecting that. And the key reason for that is we have this engulfment, which is a balanced price range, okay? And that we have this bearish breaker, which price should not trade above. Okay, we can see in London the midpoint's respected. Okay, and then New York confirms the entry by going up into this fair value gap created in London in the balanced price range, and then starts to break down. Okay, let's talk a little bit about targets, and I'll talk about more entries on the way down. If anyone was not confident in getting that entry or missed that entry, there were more entries lower. Okay, so immediate target will be this low. That's enough, right? It may look small, but you've got equal lows there. Okay, I can even extend this all the way over here. All that liquidity sits right under there. If you're getting in here, okay, with this New York move up down to those equal lows, is enough. That there is over 100 pips. That's all you need. You don't need to capture this massive move down. Okay, you could target this low, right? This low here is the PM session low of the previous day, right? I like to target those lows. That is also inside of this fair value gap. Okay, targeting that from this New York entry is close to 200 pips. Okay, so many easy exits. You don't have to have any stress on the entry of this trade or the exit of that trade if you just apply some key rules in your trading, right? You could put multiple positions on if you can based on your own risk tolerance level and target key lows on the way down. A first exit could be at this low. A second exit could be at this low. That would be the absolute minimum that I would expect. Previous PM session lows, okay? Or if you're very ambitious, you can leave a runner to take out these lows, okay, which were the Tuesday New York lows, okay? But you don't need to take that big exit, okay, because you've got plenty of opportunities to take this trade off from that New York entry. Okay, so it does take some study. You need to study the charts, okay, and identify these setups. Go and do some backtesting. Look at the charts, okay. Now on a high time frame, my target was based on a daily time frame, okay, and all I'm looking for is the market to come back down into this day here, right? So we were up here somewhere when we're at above 2470 when I said we are going down 300 pips, and I'm simply looking for us to come back down to rebalance into this level. That's where I got that 2430 from, okay? Obviously, we went lower. Do I care? No, I don't. I'm not concerned about missing potential profits. I've already locked in substantial profits on my trade, which is right there, okay? That's my trade, substantial profits on that move down, and exited exactly where I said I'd be exiting. Go back and look at my video around that 2440, 2430 mark, okay? And that's where we got to. I've taken the trade. I'm happy. I'm not concerned that it's gone lower. I've always maintained that I'm not here to take the best exit. I'm just here to take the easy exit, okay? So for gold right now, I think we are coming down lower. I have mentioned, I've put a Twitter post on that here. So there's the levels that I'm looking for. There is a video that talks about that. Go and watch that, okay? And study the charts. Look for this on a 1 hour time frame. This is all you need, this model. Study this chart because you'll see this again and again and again. And now you will know how to position yourself, okay? When you see this, you will know to expect a repricing lower, okay? Risk management is the key. Patience is the key. You got to wait for the right time, the right day, the right price levels. It's not just about price. Time and price is the very key element, okay? Patience is the key. We've gone down and we've had this pullback. A lot of people most likely were thinking this is now long and targeting these highs. But we have these higher time frame, breaking structure and bearish signatures, letting advanced traders know to and institutions to add to their positions to go lower, expecting lower repricing, okay? So I hope the video was useful. Go back and rewind and identify. You need to print this out. Print this out and post it somewhere and study this because you'll see this again and again and again. 3 up candles making the bearish order block, immediate engulfment, validating those 3 up candles as the bearish order block with price displacement leaving a gap with this down candle inside of that swing low, making that the bearish breaker, waiting for price to reprice back up into that fair value gap, into that bearish order block, into that bearish breaker at the right time. 3 a.m. on London. Doesn't have to be on London. This could have been New York, but 3 a.m. London, and that chart pattern, the 3-bar pattern tells you the highs are now in London, made the high. New York may come in to rebalance that before going lower, but not expected to take that because at that point the high is in based on everything we see on the left-hand side, especially the bearish breaker. The midpoint was very key because that tells you with this repricing down, Chinese state to live in London tells you that's it. We are now bearish and any pullback is a pullback for repricing lower, okay? I will now talk with you in a future video.